Hey folks, and welcome to this video. Today I'm going to talk a little bit about the Asset Strength Reversion, run over the parameters because these seem to be changing quite a lot. The reason they're changing is because I'm trying to reduce the number of parameters in an attempt to simplify using the ASR, which is a good thing, but it's also a bad thing because the flexibility of the configuration is reduced at the same time. And so I'm really trying to do things in a way that we are able to use the algo easily and efficiently, but at the same time leaving enough configurability to the algo so that people can fiddle around with it. But we have some configurations that work really well, and I'm just going to share those with you today, but I'm also going to go through all of the configuration options just so you know exactly what they're doing. Okay, so we have the version which is 1.081, and this is the version that I'm going to release very shortly. So if you haven't already grabbed this algo, I recommend that you go into the Pipnotic website, you go to my account, go to downloads, and then if you're subscribed to the algos, then you'll see ASR there, and you can just click on that. And remember also to download the product key because you'll need that to use the algo as well. Okay, so we have a couple of settings. We have the product key, which is the one in your downloads that changes on the first day of every month. And you have to put this in just one time on the first day of the month, and then it'll keep it activated for the entire month. And then you have your private key, and this is the one that you received upon signing up with Pipnotic. You should have received an email. In this email there is some information, among others a link to the website that teaches you how to install the software, and also a little section that contains your private key. You need this as well, otherwise the software will not work. So you need both of these. And I apologize for having to make it so complicated, but I had a guy who was running a prop trading company, and he was paying for one license, and there were 50 traders using it. And so I had to kind of tighten the screws a little bit. Anyway, he went to prison, so that's a good thing. But so this is why I have these two settings. Okay, then we have this one here. This is the seconds setting, and this essentially tells the software how often to run the algo. And currently out of the box it's running every 20 seconds, which should be enough. If you're trading on the weekly, the daily, and the 4-hour chart, the hourly chart, I mean, on the weekly chart, gosh, if it's running like once a day, that should be fine. But if it's running on the 1-hour chart, maybe you want it to run every few minutes or so. So you can put this up to, I don't know, 300 or whatever if you want, like 5 minutes. But that's entirely up to you. Then we have some configuration options here. Debug and error. The debug just tells the software to print out a lot of debugging information about what's going on behind the scenes. But this can get a little bit noisy, and sometimes the broker complains about the terminal sending too many messages, because these messages essentially are going to your broker. So they might complain. I've received numerous emails from brokers saying please turn down the logging, and so this just enables you to do that. Then we have the next one, which is the error, and when this is set to true, it's just going to display errors, so critical errors. We have risk, we have lot size. If you set this to a value like a 1 microlot and you clear this, the balance risk, then it's going to only trade 1 microlot per position no matter what. So if you have a stop that's 10 pips, 1 microlot. If you have one that's 1,000 pips, 1 microlot. It's the same. Okay, then we have this one here. This is the max lot size. So let's say that you are allowing it to run at let's say 0.25%. So now we're risking 0.25% per trade. Okay, and let's say that you have a relatively big account, but you don't want the position size to go over, let's say, a mini lot. Then you can just set this like so, and this will ensure that if the resulting position size based on the configuration options is greater than 1 mini lot, well then it'll cap it at 1 mini lot. But if you set this to 0, well then it'll just provide the actual lot size based on the configuration options just here. Okay, then we have the stop multiplier, the target multiplier. The default options are based on a configuration that we have running in our little test group, and it's running really well. So I would leave that. So what we can see here is that we're risking $3 to take $1, which seems a little bit off, but we have a very high hit rate with this configuration, close to 90%, and so it's okay. I mean, we don't mind risking 3 to get 1 if we're winning 80, 90. I think we had 92% of the time actually on this configuration, and so we don't mind so much. So we just let it go. And so what that means essentially is that if you have 3 winners in a row, so you win $3. If the next trade is a loser, well, then you give back the profits from the previous 3. And so it's what you get is if we just kind of draw this. Hey, Frida, my little dog came to visit. So you have a bunch of trades that go up like that, wins, and then you have a loss, and you have a loss. So it looks like that. But when you're winning again more than you're losing by far, then the equity curve is still positive, which is what we want. So this is what I would leave these default settings. Then we have exposure to symbols. I keep this on 1, so it's only taking on 1 position per asset, which means it's only going to take on 1 trade for gold, for example. It's not going to take on 2 positions, just 1. And the exposure to currencies, you could put this on 3 or less. This is important because if we have a very strong British pound day and we have the pound which is very high, very overextended, and the algo is a contrarian trader, and so it's going to say, great, we have the British pound in premium territory, we want to sell it. The problem is if you have this set to 100, then it's going to sell the British pound across 100 currency crosses, which is a really bad idea because some of them lose. And so if you're overexposed to an individual currency, that currency's strength or weakness will be seen relative to all of the other currencies. And so you don't want to overexpose yourself to any one currency because bad things can happen. So try and keep that at maximum 3. We have maximum margin level. I like to keep this at a pretty high value. The default setting is 5,000. You can, as long as it's above, I don't know, maybe a couple of thousand, I think you're okay. If you're down in the hundreds, then you're playing with fire because the robot will keep on taking positions because the margin exposure is still above, let's say 100 or 200. But the problem is that your broker will often do a margin call at, let's say, 50% or 80% of margin, and when that happens, they close out all of your positions. And so you want to keep this really far away from that. And I think that if you have it on 1,000 or a few thousand, then things should be pretty good. Okay, here we have enable multiple trades per symbol, and this means that if we have a trade that is won on the euro US dollar, once the position is closed either in profit or loss, it will not trade that asset again that day. It'll wait until tomorrow. And I found that this is important because to go back to the example I was using a second ago, if the pound is really racing and we take a loss, we don't want to keep on selling it again and again and again, taking on another loss and another loss and another loss. So once it takes a loss, it says, well, the pound isn't slowing down today, maybe we'll try again tomorrow. So it'll just enable it to take the back seat and to wait. We have loss mitigation here. This is telling the robot how much we are prepared to lose per day, per week, and per month. So we're happy to lose 1% a day, 3% a week, or 5% a month. These are pretty standard. You don't want to increase these to a whole lot because the loss limits are super important. Because the robot will be just fine. It'll perform well. It'll continue to grind off small profits. But when it starts to lose, you want it to shut down very, very quickly. And so ensuring that these settings are set and they're nice and tight, like you can see here, is just a very, very good idea. Move stop to break even. We want to set this to true. And so when when we go to the next setting, this is the trigger that makes the stop move to break even, and it's currently at 80%. So when we get 80% towards the target from our entry, the algo will move the stop to break even. And this is a good idea because, I mean, sometimes prices go, we get close to our target, and then we come back and we bleed and we go towards our stop loss. I would rather take a break even trade than watch like a decent trade go bad. And so this is just a really good idea to keep enabled. Then we have another setting here, and this is this tells the algo how much of a position to close. And so if you have it set to 0.5, well, then it is going to close half of the position when we get 80% of our way towards the target. Okay, so this is just a good way to take some of the profits off the table if this is what you want to do. But the thing is, this little function is running in the memory of MT4, and so if you're running the algo and we have trades that have already been partially taken profit, and you change the time frame, or then the memory is flushed, and so it'll do it again. It'll take half off at once more. And so it's important that when you have the algo managing trades like this, that you don't fiddle too much with the charts, because this will reset the statistics for the algo. So it'll think, oh, I haven't taken partial profits, I'll do that now. And it's really important that you understand that. We have some filters. We have enable confirmation. Enable confirmation is simply telling the algo to look for specific behavior in the histogram before jumping in to trades. And so it's looking for certain things in price to happen, and it's looking for certain things to happen in the histogram. And when the two align, then it says, great, we have confirmation. So I'd leave that on true. Then we have enable range, and the enable range filter, what that is doing is it's looking at range information for whatever asset it's trading, and it's looking for situations. It's creating an average of very volatile range data for the asset that you're looking at, and it's saying, okay, we want to take a multiplication of that value times 1. Okay, so if we reach that extreme, I suppose, deviation from a mean relative to the volatility, well, then that's also a trigger. That means that prices are very tall, or they're very negative relative to historical very volatile prices. And it's just a pretty good way to ensure that prices are standing on skinny legs like that before they decide to move sideways. And so I would leave it on at least 1. 1 is fine. Enable spread filter. This is set to true. This just makes sure that it's not taking any positions on because they're opened at market if we have more than 3 pips spread, because that's expensive. More than 3 pips, that's a lot. So we want to make sure that we're not. If it's 4 pips, then we'll pass on it. And this one here. This is relative to the swaps. And so if we have a positive swap situation for a long position on an asset, for example, the American dollar versus the Japanese yen, which is a really interesting one, it'll only buy that asset. It will not sell that asset. And the reason it won't is because it doesn't want to pay swaps, because swaps can get very expensive, especially if the position is held open for several days or even weeks. Then you pay every day, and on Wednesdays you pay 3 times swaps, so it gets really, really expensive. And so if you have these longer term positions and they're open, even if the currency pair is not moving anywhere, every day you're earning swaps, and so every day you earn a little bit of profit, and that positive swap or that positive carry will essentially eat away at any losses. So typically this works out quite well, and most often you'll notice that longer term, if you have a positive swap scenario, you want to be buying that asset because that is generally going to be trending higher, in contrast to a negative swap where you will earn positive swaps. If you sell an asset, typically that asset will be moving lower. And so this is also just kind of keeping us in line with the major flows. Okay, here we have the symbols that we are looking at. This is just focusing on the most, I think, 30 common. And then we have something here, a suffix. Sometimes some brokers, they like to add things at the end of the symbol. And I've seen, for example, .c or .f, and that'll typically manifest over here where you have Euro, CAD, .c or .f. Okay, and so if this is your symbol here, you want to make sure that you add the suffix there. You can also add it up here, so you just add the .f or c up here in the symbols list, but you can also leave this and then just add or change the suffix, which then the algo proceeds to add the suffix to the symbol name itself. And if this is not right, if the symbol names are not correct according to your broker, then it won't trade anything. So it's important you get that right. Here we have the histogram, we have the mean periods, and we have the modifier. The mean periods is simply telling us a little bit about where these upper and lower bands for the histogram are created, because essentially, I mean, the histogram it's a product of a small calculation, and then the mean and the deviations of that mean, the standard deviations, are what are important. So when you have a situation here like this one where price, the histogram goes below this line, which is I think 1.618 times deviation from the mean, then normally it's a pretty good time to begin to accumulate long positions if prices move higher. But you can leave this in default. I think that should be fine. Then we have the fast and the slow configuration. These are just smoothing variables that I use when calculating the histogram, so that we don't get kind of hacking values, inconsistent values like we often see in currency strength. This is just a way for me to kind of smooth that out a little bit. And here we have the time frames. We want to trade all of these symbols on the 4-hour chart and the 1-hour chart. This just tells it which time frames to use. And remember, of course, to ensure that you have historical data downloaded. So what I'll do is I'd open several charts like so. I would attach the sync charts to the first one. I would put I'd have a chart open for each time frame that you have here, and then I would drag the pairs over onto the chart with sync chart, and that'll open that symbol on the other time frames. And so you're just downloading data when you do that, which is very important, because the algo needs data to make decisions. If the data is wrong or incorrect or missing, well, then it's going to make bad decisions, even though I've written it to try and skip stuff that looks a little bit ugly. Sometimes it's not ugly enough, and then it kind of gets into trades anyway. So just be careful with that. Then here we have the trading session. Always trade. Yes, we want to trade around the clock, 24/5, so Monday to Friday, 24 hours a day. But let's say that you don't. Let's say you want to trade only during the Asian session. Actually, let's use the European session as the example. Here we want to trade the European session. It opens at 10 o'clock. This is relative to my server time here. And it's open for 8 hours. Okay. And then we have the next session here. This is American session. Yes. When does it open? According to my server time, at 1400 hours, according to my market watch. When it says 1400 here, so in 1 hour from now, or 58 minutes, this is when the US session opens. Okay, and you can put the time in there. So this can be interesting to do, but for ASR and this particular configuration, I think you'll find just to leave it. Then we have the days that it can trade here: Monday, Tuesday, Wednesday, Thursday, Friday, and then Sunday. Sometimes Sunday clicks on early. Yeah, and that's it. And then we have max slippage. You want to keep this small. You don't want it to slip. This just means that your broker is illiquid and it's a crap broker. So you want to keep this number super small. This is 3 points, which is under half a pip, a third of a pip. And so that's fine. That's plenty. If you're trading via a liquid broker, you shouldn't have any trouble there at all getting filled, because you're not going to get requoted or experience any slippage. Then here we have the magic number. So if you're running, let's say, 2 instances of the ASR on the same trading platform, but you don't want the trade management of one configuration interfere with the other one, well, then you have to ensure that you have 2 different magic numbers per instance running. Okay, good. And so what I do is I just normally click it on like this, and I've got all the time frames I'm looking to trade. I've got the weekly, the daily, the 4 hour, and the 1 hour, and then I just click it on. So if we go down or up here, a couple of things we need to ensure is make sure that on the Common tab, Allow Live Trading is checked, and ensure as well that long and short are enabled. Okay, you click OK, and then if you want it to run, you click the Auto Trading button, and notice the smiley face here will change from a frown to a smile. As I do that, you can see, I'll do it again. You can see it goes to a smile. And when it's smiling, then it's trading. And so then everything is hunky-dory, and now it's able to run and place trades. Good. Well, I'm going to leave it at that. If you have any questions about this, please do let me know. I will try to leave the configuration options alone as much as I can in future releases, and my apologies if I do happen to update. But please feel free to send me any questions you have. Thanks for watching.